And those who are involved include public sector workers, and that would be police officers, teachers, nurses. And so the ramifications of such a large strike involving 3 major unions and even their affiliates would be a massive one and definitely a blow for South Africa's economy. We'll keep a very close eye on this. The unions giving government a 7-day ultimatum to meet their demand of a 10% wage increase or face the ramifications. You're watching Business Edge. My next guest is standing by, so we get straight into that conversation where Nigeria's MPC has raised the benchmark interest rate during its last Monetary Policy Committee meeting for 2022. Now, Nigeria's central bank has voted to increase the benchmark interest rate by 100 basis points to 16.5%. This is the highest level of the monetary policy rate since 2001. Now, the MPC noted that the tightening will help restore investors' confidence while also curbing higher rates of inflation. The MPC did increase the MPR by 100 points, as I said earlier, while the cash reserve ratio was retained at 32.5% and the liquidity ratio also kept at 30%. Now, earlier this year, the CBN increased the MPR from 11.5% to 15.5% across 3 consecutive rate hikes. And Nigeria's inflation rate rose to 21.09% in October 2022 from 20.7% recorded in the previous month. Joining me now is economist and financial analyst Muktar Mohammed, who also is the CEO of Asheer Dynamic Solutions. Muktar, welcome again to Business Edge. Thank you as always for making out time.
Thank you, Tolu.
So in terms of this increase that we've seen, there was a bit of speculation that it might actually have gone up higher than the 16.5% we saw. But what were you expecting from the MPC to reduce, possibly most unlikely, hold, or even increase around what we saw yesterday?
I thought they would hold, but I think they shocked me by increasing. I thought they would hold because we've been seeing this increase and we've not seen so much impact on the inflation figure. Though if you look at it month by month, you can see marginal impact, but I thought they would go because when you look at the result that came out from the bank, especially the financial sector in the third quarter, we saw that there's a lot of non-performing loans from businesses, and that means that the hike in interest rates is affecting SMEs and even bigger business. So I thought they would look into that and maybe hold the rate till next year and see how much they can do administratively to have a positive impact on the market. Because monetary policy is not the only driver that you need to drive your economy, especially when you are battling inflation. Inflation that we are battling in Nigeria has to do with FX volatility. And that is one area that the CBN has shy from up to this day. They've not been able to address the FX market because about 80 to 90% of what we consume are imported, and when you have volatility in your FX market, then you definitely see price of goods and services go up, and it's what fueling inflation. So if they address the FX challenge, then you will see inflation come down. But what they are doing is just raising hike like every other nation are doing it, forgetting that other nations are also adding their physical side into it. As it stands now, the physical side is non-existent, so it's also the monetary side. So I don't think I was impressed with the hiking rate.
So you did mention marginal impact, and that's the next question I have for you. So this is the 4th time in a row that the CBN has raised the rate. It's also the longest unbroken cycle of monetary tightening since 2011. And we have agreed that it does take some time for the impact of these decisions to be felt. So let's look back at the 3 previous increases. Have they had the desired impact that the CBN wanted, that the Monetary Policy Committee hoped for them to have on Nigeria's attempt to fight inflation?
They have not. I think the CBN governor has also said that they have not, but he believes that they need to continue to do that so that they will mop up excess liquidity. And I think what they should be doing is not a hike increment, because he's saying something else and they are doing something else. I thought what they should be doing is mopping up excess liquidity in the system, and also begin to look at how they can bridge the supply chain, which is the major problem, because inflation that is happening in Nigeria now is a 3-way inflation: production inflation, microeconomic inflation, and demand and supply inflation, all playing out at the same time. So I thought they would look at those and begin to look at how do we edge against this, especially the production side. Like I've said, it has to do with FX. The microeconomic side also has to do with some of the policy that have only come from CBN, have not come from the physical side. And the demand and supply side also have to come, because a lot of Nigerians are demanding goods that are not produced here in the country. And when you look at the production side, high cost of gas also is one of those problems that is affecting the manufacturing sector because power to them is non-existent. So I thought those are the key things they should be addressed and not really just hiking rate alone will not bring down inflation, especially in the Nigerian situation.
So let's look at that Nigerian situation a bit wider. So the CBN is hoping, like many other central banks, that by raising interest rates, it can reduce money supply in the economy and also rein in inflation. But the downside for us and everybody else is the potential it has to slow economic growth. So do you think that the CBN is adequately balancing the need to rein in inflation with the risk of slowing economic growth? Earlier in the news, we mentioned, of course, many people are hoping that now the U.S. Federal Reserve will slow down on its own hawkish trend because we've seen the slow economic activity data coming out. Do you think we're adequately balancing the needs and the risk here on the Nigerian side of things?
No, we are not doing. We are Nigerian, when we want to do something, we, like someone said, we just copy and paste. So we are just doing what we see all in central banks are doing. But we are not looking at the particular nation of Nigeria. We are not looking at all the central banks when they hike this rig, the physical side of those government decide to do something to make sure the burden is not so much on the people. Rather, what we have here is that once this rate is high, the burden comes to the people. There's no any incentive for business. There's no even incentive for the civil servant also because their salary has not gone up also. So definitely, I think we are just using a one-way approach, which is raise hike and see how far we can raise the hike to bring down inflation. And I don't think it would be a good way to fight inflation if you are not addressing the main causes. Because what we are doing now, we are just treating the symptom. We are not treating what is really causing the disease.
So then I'm going to ask you this as we wrap up this conversation. The higher interest rate is going to, of course, increase the risk, the cost of borrowing for businesses and also make goods and services not produced in Nigeria that much more expensive. Are there any other actions that the CBN needs to take in order to lessen the impact of the higher interest rates? You've talked about this being monetary without being fiscal. So what does it mean for us to be able to see the CBN do more to cushion the effect of these higher interest rates for the Nigerian citizen?
I don't think we should be talking to the CBN now. We should be talking to the fiscal authority. We should be talking to the government. They should be coming with tax incentive for small businesses, and they should be looking at increasing the salaries of workers. I think the CBN have done what the monetaries have to do with based on the data available to them. It's left for the fiscal side to begin to reduce the burden on Nigeria, and they can do this by looking at businesses. How can we get tax holiday? Just this morning, we've seen fuel queue all over Lagos, and one of the reasons they said is the 0.05% charges on tax that they will be charging on petroleum product. I think it's only in Nigeria that in this era of COVID and the Russia-Ukraine cycle, we are seeing the government looking more at taxing the people because they want more revenue because they have borrowed so much. So I think for the CBN, they've done all they have to do. I think it's the physical side that need to come up with their own plan. It's their side that will definitely alleviate the sufferings of Nigeria. You see the United Kingdom doing that by reducing in terms of the physical side, saying that they are going to pay about $2,500 in terms of energy costs for the people. In the United States, every home that have 3 children, depending on your income level, have been given $100 every month for food. So we need to begin to look at such palliative that can touch the real bottom Nigeria and bring them out of poverty, especially when you look at the figures that came out from the Nigerian Bureau of Statistics. We need to begin to address a lot of issues. And by doing that, it's the physical side that hold the four heads to do all this, not the monetary side any longer.
All right, Muktar Mohammed, we'll leave the conversation at that for now. Thank you for joining me. And of course, today does happen to be an interesting one. We're expecting President Muhammad Buhari to unveil the redesigned Naira, which was announced by the CBN governor just recently, as a way of also, one, mopping up excess cash in liquidity, or rather in circulation, and possibly also touching on the inflation and the Naira to dollar exchange rates. The World Bank has warned against a further hawkish stance, but it's not just Nigeria that continues down this road of increasing interest rates. We'll see what happens in the next few weeks to see if this decision bears any fruit. You're watching Business Edge. When we come back, it's NC4 to watch as we wrap things up. Now, a few stories we're keeping our eyes on. The Institute of International Finance is reporting that emerging markets' debt-to-GDP ratio returned to record highs despite a $6.4 trillion decline in the global debt pile to $290 trillion in the third quarter due to a strong dollar and slowing bond sales. Budget deficits and slower economic growth lifted the debt-to-GDP ratio in developing economies to 254%, matching a record high hit in the first quarter of 2021. South Africa's Finance Minister Enoch Godongwana says the government still has more hoops to jump through to avoid being grey-listed by the Financial Action Task Force. Now, grey-listing will impact South Africa's ability to trade internationally. The National Assembly passed a bill that aims to combat money laundering and terrorism financing. But the bill has not been supported by the majority of opposition parties, which complained that it was ill-conceived and too rushed. Telecom companies say they have started blocking and deactivating SIM cards in line with the directive from Ghana's Ministry of Communications and Digitalization. The Ghana Chamber of Telecommunications said that the blocking and deactivation of data services of some subscribers commenced on November 20, with a full blocking process due to kick off on Wednesday, November 30th. The Chamber said its members are obliged by the directive to completely deactivate all subscriber SIMs which have not completed the biometric capture registration step. And finally, Nigeria's President Muhammad Buhari has flagged off the commercial production of crude oil and gas from the $3 billion Komani Integrated Development Project located along the fields of Gombe and Bauchi. The Komani project, with oil prospecting license 809 and 810, lies in the Gongola Basin of the Upper Benue Trough. The field, according to its promoters, will produce about 50,000 barrels of crude oil per day and holds over 1 billion barrels of crude oil reserves, shooting up Nigeria's oil reserves to over 38 billion barrels. And that's the business we have for you today. Don't forget to follow us on social media. We are at News Central TV. You can also head to our website and download our mobile app. Until next time, I'm Tolulope Adeleru-Balogun. You have a fantastic day.